following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 8th terrific Voting Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 130 points at 18,389. S&P up 14 at 2145. NASDAQ up 43 points. She's trading at 5209. Russell's up 7, trading at nearly 1,200. The DAX closed up 25 points. The FTSE up 36. Gold is off $2. Silver's up 28 cents right now. Light sweet crude is up 30 cents, trading out at 45.19. Leading the charge here to the upside, almost $100. The upside is Priceline. PCLN's a ticker symbol. That's almost 6.75%. Google's up $11, a little over 1.5%. The Regenerate Pharmaceuticals up 2% or $7. Intuitive Surgical up $8. Acacia Communications up 6. To the downside, Hertz Global Holdings down 34%. That's a stinger. 74 million shares to the downside. One Main Holdings down 38%. That's another stinger, down about $11. CVS Health Corp down 11% or $9. Matson. So there's a little bit for the bulls, a little bit for the bears out here. And so where do we begin? You know, on this election day out here, I do hope that you have voted, or that you're going to go out and vote. Your vote does count out here. We're going to go take a look at the votes and the counts that matter inside the market. That is really where we should start. So where are we? Well, here is what we know. Let's take a look at, like any good reporter, right? And just simply get to the facts, right? Here is what we know. What we know is the following. I posted this chart here inside the Tiger's Den just before lunch because this chart has a lot of meaning. This is the S&P 500. And on this S&P 500, if you and I go ahead, this is H.M. Gartley is just simply loving it. You know, he's now saying to you and I, hey, that book that I sold back in 1935, that was the equivalent, this is what you would pay for that book, the equivalent of going out and buying a Ford F-150 today. Yeah, that is the equivalent of what that book cost back then. That's how important this trading technique, if we're going to go ahead and equate it to today's dollars. Like today, it might not even be a Ford 150. It might even be a better vehicle than that. But here's what you and I know. We're now in our 17th, and unless 17 is the charm out here, 17th actual Gartley buy pattern that completed and formed and confirmed yesterday. That is the pattern. There were plenty of signals. You and I took a look at those. You know what those signals are. Well, maybe we'll take a look at some of those during the show today. But if we do take a look at what I posted, or the question that I posed here, just simply going back to 2012, if we take a look at, because you and I are pattern recognition specialists, experts, whatever it is that we want to take, you know, however we want to term ourselves out here. But each time a Gartley buy pattern has formed, we go back further. We really don't need to, right? Just take a look at since 2012, what the market has done, the market being the S&P 500, it's always been able to make it back up to its highs. If not, go ahead and take them out. Clearly, it's been able to take them out. It did it for the 9th Gartley, the 10th Gartley, the 11th Gartley, the 12th Gartley, the 13th Gartley, the 14th Gartley, the 15th Gartley, the 16th Gartley. Well, we are in Gartley buy pattern zone number 17. So what are the odds here that what we're going to see does not mean tomorrow, does not mean the next day, that what the S&P 500 is going to do is make it all the way back up to its highs, most likely go ahead and take those highs out. That's, look, if you are a person that believes in the A to B equals CD pattern, because that is what Gartley taught us. In this case here, we look at also maybe retracements 0.618, 382, 786. If we just look at what was the retracement here, I don't know, was it 50%? Was it 38%? It was a shallow retracement. I think it was from high to low out there. So about a 50% retracement. That says to a strong bullish move on the new pattern to the upside. Well, we've seen that over the last couple of days out there. So we know that is in place, right? 17 Gartley buy patterns, each of which took us back to the highs, if not actually going ahead and taking them out. Again, doesn't happen in 2 days. So we know that. That's the first thing that we know. Screw the elections. No, I don't mean screw the election. I mean screw the election information out here. Of course, we'll go back to election analog information and see if we can make heads or tails out of it. But what I want to make heads or tails out of is the market, the stock market, what you can do, what you can prepare for. And we're going to take a look at some of those situations so we know what to anticipate next inside the market. It's probably not what you're hearing on the boob tube that's out there. It's a very affectionate term that I call that television, because that's what my mom, rest in peace, she used to call it. And quite frankly, I have to, if she were alive today, she would be calling it the double boob tube. And I mean that very affectionately as well. And anyway, so we've got a nice little Gartley buy pattern out here in the market. What else do we know? Let's get rid of the retrace. What else do we know? Well, look, one of the things that you and I know, and we looked at this, if ever somebody was riding through the streets of the stock market that was blowing their horn, not tooting their horn, not patting themselves on the back to say, danger, Will Robinson, that's assuming that Will Robinson was trying to go to the short side out here, was the huge, and I still got to push my temples in to say, really, is it that easy out here? The huge difference between the spot VIX index, it's much better today, and all of the futures contracts. Today is getting more in line with where it needs to be. It still has more to run to the downside. Doesn't mean tomorrow, but finally it is now coming back in line. You've got the spot VIX trading at 17.99 out here. So it is back below July of 2017, June, March, April. It is now really just trading above October, November, and November, December, January. Forget October. November, December, January is where it's trading above. So it's really back in line out here. So that says, okay, now that we're getting back in line, now what do we really take a look at? What will be important today, I would say, inside of the VIX index, Stevie's blue line. We don't have to worry about my red line just yet. That would be 1748. If we were to see a close back inside 1748, not 1747, I don't know, something below 1748, that would then say Stevie's red line in the VIX chart, that is where price will head to, 1551. We know what happens as price in the VIX moves lower. We know when it's trading below 1551, sayonara to any shorts out there. But we don't have that signal just yet. We have to take things one step at a time. Steve Rhodes with TFNN. We've got more for you, and we'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on.
Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 104, S&P up about 11 points right now. So we took a look at the Gartley buy patterns. We took a look at the VIX index. We know some levels that we want to pay attention to today. Things have gotten back into line, so which is really what you and I discussed. We looked at. We said it's the biggest no-brainer that that was going to have to get back into line soon, post-haste. You got to admit the insurance writers out there have been loving this market. They are the ones that have been making just simply a boatload of money. Now, back to the election. Not that we've even gotten to the election, but to the election. As you are familiar, you and I have been looking at this chart for basically 10, 11 months out here, right? And then trying to anticipate that we said, hey, we've got really one of two options that are going to take place. Either the office of the president is going to go from one Democrat to the next, or it's going to go from a Democrat to a Republican. And depending on that outcome, here's what we should anticipate. Now, this is data that goes back to 1932 out here. We're going to take a look at more data. This said, hey, if the Democrats retain the office of the president, come around towards Election Day, which is about right here, you ought to see the market move higher up into it. That's what we've got going on. And then after the election results come out, doesn't matter which party it is, we ought to see the market pull back into about the November 14 time period. That is still in play out here. I have not really wavered. I still like being on the long side. The patterns were in last week to say take a long position inside the S&P 500. Thus, we did, regardless, I didn't say irregardless this time, regardless of this pattern out here. This is like a guideline map out here. You don't necessarily trade it to the day. Sometimes it works to the day. Always amazes me. Of course, the bottom panel here says, hey, if the Republicans are to take the office out here, you should see the market move lower right around Election Day. Market moves higher into Election Day. Okay, in essence, it has fulfilled that objective. Then it backs off. In fact, in this case here, it would back off into about the early part of December before it tries to make another one, or maybe even the right around Christmas Eve or so. In essence, we really kind of trade sideways, never really taking out the highs that we would experience inside of the Dow really today, because this chart here is really tracking, in essence, the average price movement of the Dow. So that's what it says. as you know, or if you don't know, I sort of have taken this chart and thrown it off to the side and said, you know what? The normal analog patterns of the presidential campaign with regard to this data just hasn't really been following along. It's as if the market is confused out here. But I do not like being confused. I don't know about you. Now, being confused means you're just about to learn something. Did you know that? And that's what it always meant for me. If I've confused you right now, here's the good news. You're just about to learn something. Somebody said, tell me how the S&P 500 could actually go higher or take out the highs out there. Number one, that is the pattern of the previous Gartleys that we took a look at. That is absolute out here. It doesn't mean it will happen this time, but it has happened in the past. There's no reason to believe that won't occur again. Now, what we also know is the following. We're going to have a first-term president, right? Somebody, it's no incumbent that is going into office. So we're going to have a first-termer that is in there. Now, there is a lot of data that is out there. You don't really know how they get the data. I tell you how we get the data, and I tell you maybe here's some data that we ought to eliminate in order to really try to understand the patterns out here. But if we take a look at first-termers out here, you'd have 1932, 48, 52, 60, 64, 68, 76, 1980, 88, 92, 2000, and 2008. And that is what is compiled with inside this pattern. Now, if we come to election day out here, if we were to just say this is what typically happens with a first-term president, we could get snookered. I do not want you getting snookered, although that is a great game of pool on those extra long tables out there if you ever get a chance to play it. It's a great game out here. But normally what you see, this is kind of like all the time. Doesn't mean it'll happen today, but normally we see the market move up into election day. It's probably just, hey, is that what we have going on right now? Absolutely. If we were going to focus just on this first-term presidency, regardless of whether it's Donald Trump or Hillary Clinton out here, this would say the high's going to be in today at 4 o'clock. Maybe it was 3, maybe it was 1:30. It's not even 1:30 yet. Maybe it was 1 o'clock. But today, it says that's when the closing high, would come into the market, inside the Dow. And then the market would go ahead and move down into November 22nd, right? Thanksgiving, everybody's going to be sitting around the table bummed out, regardless of who it is, because this is their first year, right? Doesn't matter which of the two it is. They're going to be bummed out saying, I don't like who won out there, and all the reasons why, of course. But right around November 22nd in this case here, the market then starts its Santa Claus rally and moves up to January 6th. Is this a possibility that this is going to occur out here? The answer is yes. Then in January 6th, you know how the market always moves lower into January? Right around the 30th, it makes a bottom. 30th, maybe early part of February, as it did this year out here. This says, screw that. You got to wait till March 9th. March 9th. Boy, that seems awfully odd. How is it possible that March 9th, the same time frame that we made the bottom in 2008, hey, maybe we ought to eliminate 2008. Maybe the year 2008 was really an anomaly that's really going ahead and influencing this chart out here. So what if we eliminate 2008? What does the first-term presidential stock market look like out here? Well, I am glad you asked me that question, because here is the answer. And this is likely what it is you're going to go ahead and prepare yourself for, because that Gartley pattern that we just saw, Gartley number 17, that is likely not to be the liar. That is the tell in the market with regard to what it wants to do. That's one of the tells out there. That also says in this pattern here, market moves higher into election day, backs off. In this case here, could back off all the way into about the 18th. So we're going to say 18th to the 22nd. Doesn't really matter. And whether if you want to use the 14th to the 18th to the 22nd out here, that is a real possibility, a nice little retracement. And that may all that it is a retracement out here. Don't know which one it'll be. And then, folks, so if your gunpowder is not, if it's sitting idle out here, I say you wait. You wait and you sit on. If you're long, you adjust your stops. You make sure that you can't lose any money, or you go ahead and you take your profits. I mean, that's, in essence, the newsletter I'm going to write to subscribers, which I really wrote this morning. I said the same thing out here, but I want to make sure that it's clear. You know, we've got nice profits off of the bottom. Here is the pattern that is in play that is likely to be the case. Very hard for me to find a situation where, on average, the market takes off on election day. Could, okay? And I will say, if you're a conservative trader, there is nothing ever wrong with taking profits. That's what this game is all about. And then I would say you're conservative. You're going to be inclined that this is a pattern that will take place. Let the market pull back. And folks, if you eliminate the year 2008, this market just screams that it's moving higher. And we're not talking, I mean, yeah, we're going to see ups and downs along the way. But this basically is a up for America chart out here. This doesn't matter who wins. It doesn't matter whether it is Donald Trump or whether it's Hillary Clinton with regard to the stock market patterns. And then lastly, what you and I can fall back on is you just tell me what this S&P 500 chart says. These are the horizontal trading ranges out here. We know that price just basically came back and tested the 2112 level. Even if that fails, the entry point into the long, and I mean long, go long, back up the truck, is going to be the 2000 level inside the S&P 500. And if that's what it does, so be it. But right now, we are more likely than not, the S&P 500 going to head to 2225. 2225. That's what the charts say. That is not what I say. That's what the patterns say. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Up 110 right now. You know, analog patterns are cool, fun to, they're good to know. You should, how do you know where you're going unless you know where you've come from? So there's a reason to understand these different cycle patterns that are out there. if I've learned any one thing, is that the patterns that you and I trade in the market, seventh wave moves, A to B equals CD patterns that are confirmed when they're complete. That means you must know your P's and Q's, your bullish and bearish reversal candles out there, the price relative strength divergent patterns. If you just traded just those three, they'll give you better signals than any analog pattern will. You know, how many of you have seen, hey, this year looks like 2008? Eventually, the analog patterns fail. That's what I found. I've been guilty of it, you know, to the extent that I've shared that with you and you've been a party to my guilt. I'm sorry about that. But we do pay attention to them out here. We have enough evidence that says that the market wants to move higher. That doesn't matter who gets elected out here. All this stuff, all this hogwash, all this just simply garbage that is fed to us is only fed to us because they're reading it from a prompter. They didn't actually do the work. They didn't actually do the questions like you and I do. We just, you know, we don't look at a chart and say, well, that's interesting. How did March show up as the bottom there? Is it really that easy? Does it? Oh, no, it actually wasn't that easy. You just had to remove at least a year's worth of data that just simply was in the influencing mathematical factor that was just kind of screwing everything up. But we're not. It's just good to know those analog patterns. Okay, so I mentioned the other patterns that are important. Let's dive down, right? And you know that I'm willing to change, and I will change. How fast? In a heartbeat out here, in a heartbeat, if the market gives us some other type of different signal. Right now, that signal, if I take a look at, believe it or not, are we going to believe it or not, the summation index out here, only the Dow has actually just turned up, gotten above zero. Earlier in the day, the NASDAQ Composite and the New York Stock Exchange were above zero. Very healthy move over the last 2 days. But let's pay attention now to the patterns in some of the intraday charts out here to suggest that, hey, maybe the high is in. If we are going to get a confirmation that the high was in, it comes from the 30-minute chart here for the NQ. And why does it do that? Well, it does that because we are in wave number 7. I believe price is moving higher just fine, has all the strength that it needs, unlike earlier last night when it moved down a little bit, formed a little bit of a top. That was taken out, said we're going to go to the next wave, to the upside, maybe beyond. But right now it looks like during this 1:30 well, I can't say. We're in the 1:30 session, 1:30 to 2 o'clock session. Right now, unless this is delayed, it might be delayed. Maybe I've got too many things running. So it looks like we are now getting a confirmation of that 7th wave. Now, what does that mean? It says first, price is likely to back off into 47.93. Stevie's red line out here on the 30-minute chart. Intraday, 30-minute chart, we're seeing the signs that, the market's part is not that this is like a meaningful top. It can be. Take a look at the analog, right? I don't want to tell you how to read it out here. But really what you and I must do is not just pay attention to only one time frame out here. If you and I are flying a plane or you've got a pilot out there, do you only want them to look just straight forward, not left, right, up, and down? You want them to be, and what's going on behind them, right? You want to look in your rear view mirror before you make a turn, your side view mirrors as well. So let's go take a look at the side view mirrors. We'll call the side view mirrors the 120 and the 300-minute charts out here. And if we take a look at the 120-minute chart, price is actually moving higher, doing it with plenty of strength. Let me make sure that that is turned on so that that is going to set up no matter whether the bar is closed or not. I just want to make sure, because sometimes I have, let's see, what's the setting? Yeah, so it's moving higher, doing it with plenty of energy. We can see coming into that last hour, 2-hour period at 12 noon, it was moving higher, doing with less relative energy. That has since vanished, gone away. Wave number 5 out here. Potentially, I could draw an A to B equals C to the upside. I'm not going to at this stage. But on the 2-hour chart, actually, everything looks good. Everything looks very good, as a matter of fact. If we go take a look at the 5-hour chart out here, the 5-hour energy drink chart brought to us by our man Saratoga Bob. We don't see him in the Tigers Den. He's at the toga party. If we take a look at it, beautiful bottom, right? Nice, beautiful bottoming pattern last week, moving down, doing less relative energy, nice little gap up come Sunday evening. It's been moving to the upside. Nice wide-ranging bar that we're in on this 5-hour time frame that ends at 2 o'clock out here, only in wave number 3 to the upside. This chart here, this time frame looks very good. Muy bueno. If we take a look at the daily chart here for the NQ, as long as this trades above your red line, my red line, 47.80 and change out here, says the price oscillator will have turned up. If for any reason the market sells off, we see it close below that, that spells trouble in River City. Then that says, yeah, the intraday high was in. We're going to see the market move lower, regardless of who wins. That's the beauty of the charts that you and I took a look at that are normal pattern behavior that is out there. If you're in a long trade, what should you do? If you caught the bottom like we did on Thursday last week, what should you do? My answer is you should stay long. You have an excellent entry point. You know, at a minimum, you move your stop to break even. Maybe you move it higher than that, but you stay in that position because we may not get this entry price back. That would be option number one. Number two, if you are at all nervous about giving back the gains, you take your profits now, or you take them at 2 or 2:30 or 3 o'clock because you've got nice gains out there. And then you say, look, there's enough information here that says that this market's going to go ahead and pull back and I want to buy that next retracement. There is nothing wrong with doing that either. And then, of course, you've always got option number 3. And you have when you have 3 options, you have choices, right? You don't have an ultimatum, A or B, 2 choices. Please don't give your kids choice A or B. Don't give your employees A or B. Don't give yourself choice A or B out there. You're giving yourself an ultimatum. Raise your hand if you like an ultimatum. Nobody. People sometimes think an ultimatum is choice A. I guess you could be. I say an ultimatum is A or B. No, you want to have choices out there. A or B is not a choice. It's an ultimatum out there. So the third choice is you can always go ahead and if the market takes off to the upside, jump back on that train, because you will know that you had gotten in at a nice price and you can afford to even give back a little bit of profit. So in the NQ, 30-minute chart says, and we want to watch the 30-minute chart. Why? Because if that seventh wave gets taken up, hey, it's giving you just simply you thought I was going to say something load. I'll say boatload of information out there. And that's what you and I are looking for, are the boatloads of information. Now, 30-minute chart here inside the ES Mini, no real reversal pattern that is in play. You get below 2133, then maybe, look, folks, there is nothing like the power of that 2120 line out here. Talk about a beauty in how that thing held. You have just put that on a 2-minute chart this morning. You would have watched it come down, ping it. Nope, not going to break it. Ping it. Nope, not going to break it. Ping it. Nope, not going to break it. Fourth ping, Vasily. What was his name? Vasily? Something like that. In what movie was that? That was The Hunt for Red October, I believe, out there. And then it was, hey, off to the straits. And that's exactly what the ES Mini did. It just simply went off to the straits. Now, what we also ought to take a look at here is the what else should we take a look at? Oh, I know we should take a look at. Where is it, though? It's going to take a look at the actual futures contracts. Here we go. Now, here's where it's a slight problem for the S&P. Man, it's made it right to that descending price channel. And I mean right to it. Something to think about. Steve Rhodes with TFNN, folks. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 121, S&P is up 13. This next segment is brought to us by Groucho Marx out here. For those of you on Tiger TV, you now know what I mean because you can see Steve-O's got his Groucho Marx glasses on out there. Now, it may not make you laugh, but inside it makes me laugh, and it's so important to be able to laugh out here. I want to do a segment with Basil when he's got a pattern called the Groucho Marx pattern out there, and I want him to be doing it on the chart, and then they cut away to me on the side and show Stevie with his Groucho Marx. I have had these glasses, folks, for like forever. Forever. I mean, forever. I mean, I don't know. These are 25 or 30 years old. You've got to keep those, all the hair nice and clean out there. In any event, as we take a look at this next segment, let's take a look at some of the requests from some of our listeners out here. Michael wants us to take a look at the BIS, which in essence is the short position of the IBB. So, Michael, why don't we look at the IBB first, since its message may be different than the BIS. So he is looking at this as taking a short, believing that in essence, if Hillary were to win, that's going to be bad news for the biotech stocks out here. Maybe that's the case, maybe not. I don't know. Is it all priced in? I'd rather go ahead and play the patterns. Here is what we know, though. Regardless of whether you believe it's going to be attacked from a political party candidate or what have you, president, really, right? Or it's not. Here's what we know with regard to what traders are doing inside the IBB. The swing point that was most recently tested just a few days ago is the one from back on June 27th that had 3 million shares. Now, that 3 million shares was testing a swing point with 3.5 million shares. So this 3.5 million, 3 million shares number is a good number to pay attention to. Unfortunately, it was tested with 3.1 million shares back on November 3rd. So it was tested with light volume. However, good news, bad news. The good news was that said that it was going to be tested again, which it was the following day on light volume. You can't bust it down. Be careful. This may do the opposite of what you're thinking, which it may try to bust it up. Right? If ever there was an expression, and there are many that we have here at TFNN, I love Tom's, you can't bust them down, it's going to bust them up. Anytime I see a market in a consolidation or I see price testing a swing point and it does it on light volume, that is like I just got to hit recording button number 6, and that is what plays in my ears. Well, that is what's playing in my ears right now. Nice move yesterday. Volume, about 2 million shares, so made a bottom with 2 million, bounced higher with 2 million. Today, about 1.4 million shares out here. Look, here's the deal. You may be right on the trade. And if you are right on the trade, what you don't want to see is price close above 263.21. That is your daily task market profile out here. You also don't want to see it close higher with more than 2.9 million shares out there because there is a little bit of a gap from the trading session of October 28th. I don't think you're going to get that today. I'm not saying that it is the wrong trade. I'm saying, hey, if anything, as long as you don't close above this, I'd say let's give it the actual area I would take a look at. As long as you close below 265.12, you may have something there. You probably have limited downside potential out here. You really won't know until you see another test of 249 to 240 out here. And when you see that test, you need to see it pick up volume of more than 3 million shares, preferably more than 3.5 million shares as it moves down into that area. So that's what I would say about BIS, but that is taking a look at the IBB, which I think is the better source of information. Specifically with regard to BIS, let's see if this populates here with our TAS profiles. This says on the BIS, don't let this close below the price level of the high from October 27th, which is 37.05 out there. So best of luck on that trade. That was for Michael. The other emails that are coming in, you've got Nugget and the J Nugget. Bought these yesterday, so got that. I think we've got, just seeing what else we have out here. So I scanned through these emails. Steve, what's the seasonal cycle for natural gas? I don't know the seasonal cycle. I don't know if I could pull up a chart for that one. I'll try to pull up a chart for that. It's old. It hasn't been updated. And so maybe we'll see what we can find there. But with regard to the miners themselves, and I think the very first thing, I always like to do this. I'm pretty consistent, right? What's the underlying, in essence, instrumentation doing out here, and that means gold and silver. So let's go look at gold and silver. This chart here, folks, the chart on the left is for Goldilocks. The chart on the right is for silver. Both of these are for the December contracts. And if we go ahead, speaking of December, we go back to last December of 2015, and the yellow lines on this chart represent gold and silver. They represent the closing price of gold and silver, which I think happened to mean a lot. In this case here, you can see the trend line. All that gold has done thus far has held the trend line that it was established back in 2015, early 2017. That's what the pullback did back here as we moved into a low right around the first week in October out here. So if this low fails, if this trend fails, could spell trouble, but trouble would take you down to about 1266.70. That really becomes your line of, you don't want to see it close below 1266.70. That happens to be the TAS market profile low out there. So you're right up against support. What do you do? If you're in this stuff on a daily basis, and two of these folks, I think, trade this pretty often on a daily basis, get in, get out. I think the deal is, since you're trading it that way, I guess the question I would pose is, why even be in it today? With the election and potential gyrations, yeah, we're up against support, but where you've got an event that could impact the move out here, why? You trade it kind of daily. Why not just take the day off, if you will? Some people, I used to say if you will too often, and people didn't like that. So, at this stage of the game here, that's really what I think you ought to do. If you had it, if you had it as a longer term holding, then the message would be stay. There's no reason, but the longer term holding would assume that you picked it up sometime in the early part of October when gold was coming down and hitting that first trend line out here. It's not like if you sold out, you're going to miss out on a huge move in either direction out here. So I think that for those of you that in essence are kind of dayish type traders inside of Nugget, GDX, and so forth, not the individual equities, but inside this specific trading vehicle, why? Let it go for the day. Take your profits. If you've got profits on it, take a small loss. If you've got a small loss on it, and just don't worry about it. And then just come back in and day trade it once the election process is done. That would be my best advice that I could pass on to you. Okay, we got that question. I see there's a question in here again with regard to USO. That means we have to take a look at. And this listener is looking to go long. Light sweet crude, let's put light sweet crude back up on our chart out here. Actually looking pretty good, right? What do I mean looking pretty good? I mean, price came down, tested a swing point, Rejected that swing point, slightly moving higher out here. What we need to see for light sweet crude to get its mojo, to move into the mojo to the upside, you want to see a close above 45.52. We're not there just yet. Sit tight. Why sit tight? Yeah, nice little rising price channel out here inside of light sweet crude, but you're in the sixth wave of maybe a seventh wave out there. Wait for gold to pull, or gold, light sweet crude to pull back and buy it, if you want to do that, versus going ahead and taking that trade right now. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I looked for my slide on the seasonal pattern for natural gas. My apology, I could not find that. I'll try to search for it here over the next day or so and then be able to punch that up, of course. Today's show is all about this guy right here, H.M. Gartley. There are Gartley patterns, butterfly patterns. That one is Larry's pattern. Really all over the place out here. The Gartley pattern that is inside the S&P 500, that happens to be the 17th Gartley buy pattern off of the March 2009 lows. The previous Gartley patterns have taken us back to the highs and beyond. That is inside the S&P 500. We anticipate that that is what the market is going to do this time too. You're going to hear, you continue to hear really what is just a lot of just BS, because it was all before Steve. You and I went ahead and we took a look at the charts out here. The market is going to move lower. It's going to be blamed on the candidate that wins the election. The truth is, what you and I know is nothing could be further from the truth. The market basically always pulls back. Right? In this day and age where we basically see that you got 50% split or whatever it might be out there, anticipate that the market is going to go ahead and pull back. How deep of a retracement? I don't know. Can it go down into the November 18th timeframe? It most certainly can. And then it is off to the races, regardless of whether it is Donald Trump or it is Hillary Clinton out here. And I want you to be able to prepare for that next move out here. And I want you to be able to identify that next pattern. If you're struggling to understand these Gartley buy patterns and some of these other patterns that I take a look at, now's the time. Somebody's going to be buying you something for the holidays. They're going to be asking you, they're going to ask you this question. Dad, what can I get you? Honey, what can I get you? Or maybe it's, your staff at work, and they're not going to say dad or honey, but somebody's going to get you. Look, the most valuable thing that you can do is invest in yourself and your education out there. Here at TFNN, we've got an extraordinary group of people. Invest in learning the Chapman Wave. Invest in learning Tom's methods, in David White's system out here, or software, or Andy Heck stuff, or Larry Pesavento stuff, or even my tools that I share. We all give our all. Quite frankly, we do it because that's how we actually learn. That makes us better. If you're not giving, you're not living out here. So don't have somebody buy you something that is going to stick in your drawer, unless it happens to be this, okay? If it's a pair of Groucho Marx glasses, that's a different story, okay? Then it's worth getting out there. But if it's not a pair of Groucho Marx glasses, go buy Tiger dollars or something else, that are out there, and invest it in yourself so that you can go ahead and pass this on to your kids. I guarantee you, I promise you that our kids are so much smarter than we are. Or maybe I'm just speaking for myself. Your kids are so much smarter than I am out there. And I know they can pick this stuff up in a heartbeat. And folks, regardless of who it is that's going to get in as our elected official, I don't know if yours is going to represent all of the things that you believe in, or is going to manage this country the way that you want to be managed. It's doubtful that it is, okay, or whether, because our kids are going to live. Just think about this. My kids, my grandkids, they're going to live to 100, 100 and a quarter, 150. You really think that Social Security, or whatever we call Social Security now, is going to be able to fund their retirement, and they're going to be able to have it? Really? Come on. Not even close out there. So how can you help them fund it? Teach them about technical analysis in the stock market. Teach them just the seasonal patterns. Put your 401k money to work at the end of January, not April 15th. Just that one thing alone, you will make them a boatload of money over time. Hey, stay tuned. Go out and vote. And tomorrow we'll go check out the market. We'll see what it's doing. I'll give you the best information I can. Love to do it. Love being here with you. Have a terrific Tuesday. Stay tuned for David White, the Tom O'Brien Show, and the Handy Hack. Have a terrific Tuesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.